thanks for tuning in for another edition of Market Monday. This past week, Fed Chair Jerome Powell closed out the week in Jackson Hole stating the time has come to cut interest rates. We looked back at Fed actions in all presidential election years, and what we saw is the rate cut coming in September will be the closest one to a presidential election besides what we saw in October of 2008. And we all know why the Fed was cutting in October of 2008. So the big question now is, will the Fed cut 25 or 50 basis points? We think the next jobs report will be the tell-all, and more importantly than the initial rate cut is what the Fed signals thereafter for future cuts, and that's what the market will be focused on. Speaking of the market, the momentum from the prior week carried over, and now we're a chip shot away from all-time highs. However, the 8-day winning streak that we were on was snapped. We were just talking internally about how much and how quickly the pendulum has really swung over the past month. If you go back a month ago, economists were saying that things were okay and that we might thread the needle on a soft landing. And then 2 weeks after that, the house is on fire. They're calling for a recession. And now here we are, a stone throw away again from all-time highs, and things are looking okay. If we can just double click for a second on the 8-day winning streak, these are very rare for the market. We actually had to go back over a decade to find the last 4 occurrences the market was on the 8-day winning streak. And there's really 2 noteworthy points that I'd like to make. They have all happened inside of a bull market, and the S&P 500 has finished the year up significantly higher. And as we alluded to last week, there's really some good economic data, and that's what's propelling the market further. So small business optimism has been soaring, and that's the pulse for the economy. Producer price and consumer price data was very benign. Retail sales came in above expectations, so the consumer's still spending. And then on the job front, layoffs still remain pretty low. Now, there's definitely some cracks out there, and as we start to head towards the election, we think some choppiness will start to pick up, and it could mimic what we saw in 2016 and 2020 as volatility really picked up leading to the election. And then after November, the market really started to take off. So obviously with volatility comes scary news, but we're going to be here every step of the way with you, and that's why we're doing these weekly. Now looking ahead to this week, there's really 2 things that we're really focused on the economic side. So on Tuesday, we have the conference board data coming out, which really is the appetite for consumers on the job market. And then on Thursday, we have PCE data coming out, which is the Fed's preferred measure of inflation. And it strips out some of the volatile data like energy prices and seasonal food prices. So that's it for this week. Thank you for tuning in. And crazy to say this, but next time we chat, it'll be September. So I hope everyone has a great week. And then I hope everyone has a great Labor Day weekend, is able to get outside with some friends and family as well.